In this video, we'll be discussing how you can identify potential trend reversal zones in the stock market. What are the common behaviors, what are the common patterns that you might observe in a particular stock or script or index when that particular script is ending its current trend or very near to its current trend is something we'll be discussing in extreme details. There'll be four broad rules or rather patterns that you would see in any particular script, which we'll discuss in detail, and with two examples, one with the stock of Aurobindo Pharma and the other one with the Nifty index. Both these details we'll discuss how the trade was set up this year, probably for Aurobindo Pharma in the months of August 2022, when we saw a good up move from levels of 500 up to levels of 600, and then we saw a good reversal coming into picture. And then of course for Nifty index, when we saw levels of 8,000 getting hit in during the COVID lows, and then a good sharp reversal. And then of course we know how good the reversal and the rally was in Nifty. For both these, we'll discuss there are four or rather three common rules that if we followed, we could have identified these reversal zones. And again, since it's the stock market, there's no surety whether the reversal will be honored or not, but the probability of reversals are happening successfully are generally higher when you see these three or four rules getting followed in the stock market. So before we basically go ahead and discuss these rules, a quick small request for all of you. Please hit the subscribe button and please watch the video till the end. Do not forget to like the video and share it with your friends. If you have any feedback for us by the end of the video, leave it in the comment section, or if you want us to cover a video on any other particular topic, please leave the name of the topic in the comment section as well. Now, starting with basically the common trend reversal zones, the common patterns for identifying trend reversal zones in the market. The first and the most important thing to watch out is that whenever a stock is trading near a reversal zone, you'll see the price getting or reaching to basically a support or resistance point in a higher time frame. What we mean by a higher time frame is that, for instance, you are trading on a 5-minute time frame chart. Now that's your trading time frame frequency. For a higher time frame, you will go and see the chart in a 60-minute time frame. Similarly, if we see the charts of Aurobindo Pharma, we were discussing how the trade was set up in a 15-minute time frame. But for this to identify a reversal zone, we'll first go and see the charts in a probably a higher time frame. In this case, probably being the 4-hour time frame, because we are trading in the 15-minute time frame for the shares of Aurobindo Pharma. So the first thing to see is that in a higher time frame, is the stock near a support or resistance zone? Now, if the stock is in an uptrend and it's nearing the end of an uptrend, then you have to watch out for a resistance zone. But if the stock is basically in a downtrend and it's nearing the end of a downtrend, then you have to watch out for a possible support zone in a higher time frame. So that's the first thing to watch out for. The second thing to watch out is that basically in an uptrend, right? If a stock is nearing its end of the uptrend, near the end of the uptrend, then the green candles generally you will see they become slightly smaller and the red candles start gaining some strength. So green candles, the bullish candles, you'll start seeing how they're losing their strength and they are becoming slightly weaker and smaller, whereas the red candles start becoming slightly more stronger. So in this case, if you'll see on the green 15-minute chart for Aurobindo Pharma, you'll see how all along the green candles have been pretty good, strong, and have given good momentum. But when you see this zone towards August 2022, you'll see how the green candles almost did not have any momentum or strength as such. And it was pretty easy to see that post this consolidation, the bulls are really not in control and you might basically lose strength from here. So the second important thing to watch out is that is your green candle, in case of an uptrend, is the green candle losing strength and the red candle or the bearish candle becoming stronger or not. In case of a downtrend, the reverse will happen. You will see the red candles basically becoming smaller and losing strength, and the green candles becoming basically stronger and gaining strength in the market. The last and the foremost rule, which is extremely important, is that you have to wait for a change in the formation, the current formation of that particular script or stock. Before we explain this and discuss this with you in detail, just a quick small request for all of you. If you guys trade actively in the stock market or invest actively in the stock market and you still haven't opened an account with Zerodha yet, then we'd strongly recommend you to find the link for opening your account with Zerodha in the description of this video and to open an account today itself. Zerodha is basically a discount broker which doesn't charge any brokerage for delivery based trades, and the brokerage charged on intraday trades is extremely minimal. So if you guys are still using a conventional broker and paying 0.5% or 1% brokerage on buy sell rates, then please find the link, switch to Zerodha today itself and save on your brokerage charges. If you guys are active on Telegram and still haven't joined our channel on Telegram yet, then once again, you can find the link for our Telegram channel in the description of this video and join us over there. Whatever share market news we get, whatever videos we make, we first share on our Telegram channel. So please find the link and join us there today itself. So now coming back to the last point on how you can identify a reversal zone. The last point being you have to wait for a change in the formation. What we mean by a change in formation is very simple, that if basically you are tracking a stock in an uptrend, then you have to wait for the stock to start making lower highs and lower lows. So generally, if you will see a stock in an uptrend, like so for instance, this is Aurobindo Pharma, you'll see how the stock is making lower lows and higher highs every time. Basically, the stock is trading in this range. It did, of course, break and try to go below this low, but couldn't go below this low around 10th August as well. Largely making higher lows and higher highs in each case. So this is how generally you will see the formation of an uptrend. Now, what you have to wait for is that the stock starts making lower highs and lower lows, which will give you a confirmation that the structure has now broken down, the formation has now broken down, and you might see a potential breakdown coming into the share price of that particular stock or index. And this is what we saw happening in the shares of Aurobindo Pharma. Post the up move to 600, you saw a good down move towards levels of 520. So now these are largely the rules to follow. In case of a formation, if you are tracking a downtrend and trying to identify the end of a downtrend, then what you have to do is wait for the stock or the script or index to start making higher highs and higher lows, which will confirm that the formation of a downtrend has been broken. So these are the largely rules that you should keep in mind when you are trying to identify trend reversal zones in the stock market. Now coming back to Aurobindo Pharma, we'll see how all these rules together played when came into picture, played a very good effect on the stock price. So the first thing to identify was that on a higher time frame, the stock should be near a resistance zone. So this is a 15-minute time frame. You saw a good up move in the stock from levels of 520 to 600 on a 15-minute time frame. Now this is the same chart of Aurobindo Pharma on a 4-hour time frame. When you see this on a 4-hour time frame, you see how basically levels of 600 are pretty close to a previous resistance level. Now this, of course, being a resistance because it was previously a support point. Once broken, this started acting as a resistance point. Any level, basically, if you have to generalize, if it is being approached, which has previously been a critical level for a stock, if it is being approached from the lower side, becomes a resistance level, and if it's being approached from an upper side, becomes a support level. So in this case, it acted as a support level, got broken, and then started acting as a resistance level. So the first point basically gets honored over here. Second point, which we see is basically the green candles over here losing some steam around 16th August, becoming smaller, and the red candles basically becoming stronger over here. So green candles becoming weaker, red candles becoming stronger. And then, of course, the final thing where you see the stock making lower highs over here around this, and making lower lows, which basically confirms you the breakdown of the formation, and then you get a good strong down move to levels of almost 520 once again, confirming the end of this up move that we saw in the shares of Aurobindo Pharma. Before we basically go ahead and discuss our views on the index where we see the end of an uptrend, just a quick small update for all of you. We are not SEBI registered analyst or advisor, nor do we have any active position in the shares of Aurobindo Pharma. So please complete your own research before taking any active position in this or any other share. This is not an investment advice, it's just for education purposes. Now, coming back to basically the chart for Nifty 50 or the index. Again, this is a daily time frame chart where we saw the stock going down to levels of 8,000. We watched the stock on a higher time frame, that is when the share was levels of around 8,000, and we go to a weekly time frame and we see how it's near to the support zone of October 2016, when the share was basically index was down to levels of 8,000. So the first criteria gets met here. The share is now on a higher time frame. So the index is on a higher time frame is near a support zone. Second criteria being that you wait for the red candles to diminish and wait for the green candles to start appearing. Now this rule over here, of course, got basically tested over here as well. But in this case, the share index was neither near a support point, nor did you see the index breaking the formation. And therefore, the breakout reversal did not sustain over here. Rather, the downtrend continued. Now, over here is when you finally see support zone being met, red candles start diminishing, green candles start getting more strength, and then you see a breakout in the formation where you see higher highs and higher lows getting formed, which confirms the breakdown of the formation. In this case, you saw a good strong up move, but the formation continued. You continued to see lower lows getting formed and lower highs getting formed, and the downtrend, of course, continued from 9,200 to almost 7,500. Post that, you saw the formation breakdown, and that basically confirmed a potential trend reversal zone over here. And from here, of course, everyone knows the good sharp rally that we saw from levels of 8,000 to 18,000 in the index, that is Nifty 50. So that's how you'd basically, these are the 3 or 4 things, if you keep in mind, will potentially help you identify trend reversal zones more accurately. That's it for now from our side on this video. If you've enjoyed this, then please like it, share it with your friends, and subscribe to our channel. If you guys have any feedback for us, please feel to share in the comment section below. If you haven't subscribed yet, please subscribe. If you haven't liked, please like. And if there's any other topic where you want us to cover our views, then please leave that in the comment section as well. Thanks for watching once again, and we hope you have a really good profitable trading week ahead.